Okay, so when you're starting off, you need to make transactions, not just in cash. You're going to have some kind of financial bank account. This could be to pay your rent, this could be to pay a mortgage, it could be to even do deals later on when you're, let's say, if you're getting involved in more exotic alternative investments, things like watches, etc., or you're going on Amazon and you're buying stuff. It could also be, for instance, when you're just making regular payments to vendors, if you're in real estate, once you start getting into mortgages and all that. So you're going to go beyond just having cash and just start setting up a bank account. It seems fairly obvious, but just to make sure that everyone is at the same speed. So when you're looking at making transactions through a bank account, there's a few things you want to look for in terms of choosing a bank. First, you should be choosing a bank that has a local presence, ideally, in your state. When I lived in Illinois, Chase Bank was there. When I moved to Pennsylvania, at the time, Chase didn't have a presence, which made it a bit frustrating, so I had to set up a different account. I was looking at Bank of America. That's where I started off in Pennsylvania. So it's important to find a bank that has a presence in your state, ideally. Just because you might want to do transactions, you might want to actually come into the branch, etc. Now, there are some advantages of cheaper online accounts we'll get into later, but another thing you should be looking at as well is not something too small. So not a bank that almost no one has actually heard of it. Maybe it only operates in your state. It's not ideal. So you want a bank that has hopefully operations nationwide or close to nationwide. So it doesn't necessarily mean you have to go for the household names, but you should be looking at banks that have a presence around. Because if you're making transactions, it's a good idea that your bank and other people's banks, they share some kind of common link. It's easy if you're making, say, some sales or purchases of watches and things like that to make transactions if it's the same bank. When you're paying people, receiving money from people, of course, there are other technologies now, things like Zelle that make it cheap, but even there, it's not necessarily always the case for all banks. So it's good to have a sort of sister banks, things like that, where lowers the interbank transaction costs. So things like household names like PNC, SunTrust, TD Bank, Wells Fargo, Bank of America, Charles Schwab, even Fidelity Bank. These banks, they're kind of around the country, not necessarily always in every state, but in a lot of states. So that's a good idea, not to have something that's too local, just one bank that's only in your particular state. So that's good when you're making transactions, that you can lower, hopefully, the costs, because you could say, oh, I can make a transaction with SunTrust, or I can make a transaction with PNC, that there's a branch in different states, especially it could be there's a greater chance the people you're dealing with have the same one. Now, in terms of what kind of banks, in terms of what specific banks, now, if I had my way back again, I would think about starting off with something like Charles Schwab. Now, Charles Schwab is one of many banks that's very good, and a friend of mine recommended this, and it just seems to be very good when you're starting off with next to no money. So you don't want to get involved necessarily with some banks that have had a history of predatory lending. So they kind of are quite expensive to people starting off because they charge fees, whereas Charles Schwab has no minimum balance. Now, check this at the time that you're actually setting it up, because these things can change from day to day, month to month, year to year. But Charles Schwab, as well as Fidelity, these are excellent starters if they operate in your estate. These are excellent ones in terms of having no monthly service fees, irrespective of your minimal balance. So you may only have $50 to your name, that's fine. So also with Charles Schwab and Fidelity, you can take money out of ATMs or hole-in-the-walls. Anywhere in the world, pretty much, you get a reimbursement. You may pay a fee, but you get the reimbursement. Essentially, it's free. So other banks, typically, they charge you to take cash out, especially when you're not using one of their own banks. Let's say, historically, like Bank of America, if you go to a non-Bank of America bank, you may have to pay a fee. And when you go abroad, typically you're going to pay a fee unless you're using special, more advanced tricks. But for now, I would suggest something like Charles Schwab or Fidelity starting out. You don't want to be paying fees when you start off, when you don't have much money. You want to minimize this. So it's the same with not just the fees, not just the ATM, but the great thing with Charles Schwab as well is they get interest on the checking. So you earn interest. At this time that I'm recording, you get about 0.05% of interest. So if you had, let's say, $1,000, or let's say $10,000 in your checking account for a year, you'd be getting around about $5. I know it's very small, but you're getting something. It's just that psychological boost. If it's $100, you're getting about 5 cents. But in other banks, even in savings accounts, you may only be getting about 0.01%. So Charles Schwab is a great bank to start off. And indeed, I even have my brokerage account for my Roth IRA with Charles Schwab. So it's a great first. They're very, very easy to use. Now, it may be tricky for some of you to deposit cash. And when you're starting it off, they typically want to do a credit check just at the very beginning. Now, another bank you might want to think about is Fidelity. Now, Fidelity have very good brokerage, very low or no fees on brokerage services, like things like buying and selling stocks. But there's also no fees, just like Charles Schwab, on your bank account. So I would say this is a close second. We're going to see in another video, we'll talk about credit cards. There's some really big advantages here with Fidelity. Now, why do I use other accounts that are not Charles Schwab or Fidelity? So again, if I had my way back, I probably would start with these. These are great to start off when you don't have much money. But once you start to have more wealth or a bigger stock, more money across your checking, your saving, your brokerage, different accounts, you might want to think just hear me out in this one a little bit. You might want to think about something like Bank of America. Now, I wouldn't recommend them for beginners because you might get into fees, especially when you don't have a certain minimum monthly balance, an average over 3 months. So for instance, in the gold tier here on the left, you need about 20,000 to 50,000 basically to take advantage of, on average, to take advantage of these advantages. Now this one in this particular case, this gold tier, it's a 3-month average and you get big advantages. Now the platinum tier, 50,000, and again, it can be just a checking account, your savings account, and your brokerage account. So it could be your retirement accounts, it could be a bunch of things like your Roth IRA, etc. So it can be not just your checking account. It could be if you have a business as well, you could have a business account. It'll average all these things out. So looking at the platinum tier, but the platinum honors tier, that's where I graduated to. I still don't see a huge amount of advantages in the diamond tier. But for instance, one of the nice things here is that when you're not spending a lot of money, maybe like you're spending $2,500 in a particular 3-month or 1 quarter, what you can think about is your credit card, you get 3% on one category that you choose. It could be restaurants, it could be groceries. You get 2% on another category, and it could be something like your petrol, could be the restaurants as well, online purchases. Now you get $2,500 over a 3-month period where you can spend that amount of money and get 3% or 2% as the case may be. But there's a boost when you have these kind of minimums. When you get to the gold tier, it's 25%, platinum tier is 50%, but the platinum honors tier, it's 75%. There's actually no real difference to the diamond tier. With the 75%, what that means is if you're getting 3% cash back on that $2,500 every 3 months on that one category, that 3% gets bumped by 1.75. So it goes up to 5.25%. So what this means is if you spend $1,000 on this category in a 3-month period, you're going to get $57.50 back. Isn't that nice? That's really, really strong. So you get that either you can go online and you can basically cash it in right now, or it just gets deposited into your account every so often. So it's a really good thing to think about when you start to get bigger balances. But again, if you're starting off, I wouldn't recommend something like Bank of America or even Chase. Now with Chase, for instance, the Chase Premier Plus checking is kind of equivalent to the Bank of America Preferred Rewards and the Platinum, especially the Platinum Honors. So one of the benefits with Chase is you earn an interest on your account. However, it's only currently 0.01%, not 0.05% like Charles Schwab. And, you're going to have to avoid these service fees with Chase by having certain minimum requirements. So it's not a huge amount of advantage in terms of going towards Chase at this point, but there's some great credit cards that we'll get into in more advanced videos. So summarizing, Charles Schwab, great to start out with. You may even want to just keep growing with Charles Schwab. You could do almost everything with Charles Schwab. Fidelity, very close second. So hopefully this was helpful looking at banks that you might want to start out with.